Hello, I'm Susan Carlson from Brokers Alliance Long-Term Care Division, and we're going to spend a little bit of time discussing a company called LifeSecure and their long-term care portfolio. LifeSecure is actually newer to the long-term care industry, and they are owned by Blue Cross and Blue Shield of Michigan. They are an A-rated company, however, they do use the Blue Cross ratings. The company offers two types of products. They have a long-term care insurance product, and they also have something called a hospital recovery product. However, we're just going to focus on their long-term care insurance policy today. They have three underwriting classes. They have a preferred discount of 10%, they have a standard underwriting class, and they also have what's called Select, which is a 40% premium increase. They have spousal discounts, and their definition of spouse does include domestic partners. The discount is 30% if both individuals apply, are accepted, and take their policy. However, if one of them is declined, that 30% discount will drop down to a 10%, but they will offer a 10% discount if you have a married couple and only one of them is applying. The other discounts that they have is they have a 5% employer-sponsored discount and a 5% association discount. Both of these programs are terrific, and we're going to talk a little bit more about them later on in the recording. They have three payment options. They have what's called a lifetime, meaning you just pay the premiums forever until either you go on claim or you pass away. They also have a 10-year pay and a pay to 65. This is a true reimbursement policy, meaning the company will reimburse your client for any expenses they have incurred from what they call qualified long-term care services. Now, LifeSecure has taken a unique approach to the design of their policy and made it much more consumer-friendly and easy to design. Instead of choosing a benefit period, meaning how many years or how do you want the bucket to be calculated, you just choose a bucket of money anywhere from $75,000 all the way up to $1 million. So I could choose a bucket of money of $300,000. And then I would choose what percentage of that bucket of money do I want it to pay out per month. Do I want a 1%, 2, or 3%? So I could choose a $300,000 bucket of money with a 1% payout, meaning I have $3,000 to be reimbursed for my long-term care services. So a little more unique, where I don't have to deal with trying to figure out monthly maximums because I'm just choosing a percentage, and I don't have to deal with benefit periods, which to me is one of the hardest decisions when it comes to policy design, because we just never know. Is this going to be something we're going to need for a short time, or could it be a very long claim because of Alzheimer's or dementia? So it takes away that additional decision and makes it more tangible, if you will, because you're actually buying a bucket of money. Now, they have what's called a 90-day elimination period. They only have one to choose from. However, it is calendar days. So meaning on the 91st day after your client qualifies for claim, they will be able to be reimbursed for their long-term care expenses. Now, they have also a unique feature called a flexible benefit. And what this flexible benefit is, it's kind of like a cash option, meaning whatever is left over in your bucket of money for that month for home care. So let's say that I only used $1,000 of my home care benefit. I can receive 50% of my leftover monthly benefit, so I could receive 50% of that $2,000 in cash, and I can do whatever it is that I'd like to do with that money. I could use it to pay my niece to take care of me. I could use it for prescription drugs. I could use it for home modifications, whatever it is that I would like to use that money for. So it provides a little more flexibility when it comes to home care, especially in the startup phase because of it being so intermittent. And there's a lot of times that we have other options than just hiring somebody to come in and take care of us. The inflation options that LifeSecure offer is they have, of course, a guaranteed purchase option. They have a 3% compound, and they also have a 5% compound. They do have what's called a money-back guarantee. I kind of like the name that they gave this feature. And what it is that you're return a premium rider. However, their return of premium is a graded return of premium, meaning after you have had your policy for 5 years, if you pass away between the 5th and the 9th policy year, your beneficiary or estate would receive 25% of the premium that you paid. If you were to pass away between the 10th and the 14th policy year, then 50% of your premium would be returned to your estate. And if you were to die after year 15, 75% of your premium would be returned. So it's a way that they were able to bring down the cost of the return of premium option in their policy. Now, some of the features that I really like about this product and where I think it really sets itself apart in the industry is, one, the simple policy design, and two, the worksite and association program they have. For their worksite program, they have what I feel to be the most liberal participation requirements in the industry. They also do a dynamite job when it comes to technology and also marketing support. I feel they have one of the best marketing support divisions in the industry. They have an online enrollment. So if I was to go into a worksite and set up a voluntary plan, I would be able to set up the company's own long-term care website that the employees could actually go on to the website, which is really powered by LifeSecure, but it's customized, learn a little bit about long-term care insurance, and also be able to see what the premiums would be for themselves. Another option they have is that the client can say, well, what if I just want to pay $50 a month? What would this buy? And then LifeSecure will actually calculate that and come back with different options. But they are, I feel, one of the most technically advanced companies when it comes to online enrollment, when it comes to websites also. And also they have what's a website or a web portal for existing clients. So if your client has a LifeSecure policy, they have their own website that they can go on and check and see what their policy benefits have grown to if they have inflation or if they just had some other questions about their policy. To my knowledge, currently there is no other company out there that has this. They also do a great job when it comes to associations because of them being so technically advanced. I could go in and go ahead and get the endorsement of an association, and LifeSecure will actually design a website for the association where if we could put a link on the association's website so an individual could actually go to the association, click on that link, and learn more about long-term care insurance, and if they wanted to actually enroll right online. So they do a great job when it comes to websites, especially on the worksite, because I know with larger groups, a lot of times the only way to enroll in benefits would be via a website, and LifeSecure is set up to be able to help with that. They also have a lot of support for the agent as well, technically advanced, meaning I can get on a live chat with an underwriter. So maybe I'm with a client, we're not available at Brokers Alliance, maybe it's after hours. You could actually get online with LifeSecure and have a one-on-one chat with an underwriter if you have some questions when it comes to pre-qualification. So they just do a really, really great job. Granted, they are new to the industry, but I don't necessarily feel that's a bad. I think what they have done is they've taken a look at the other carriers, what they have done, and priced their product appropriately. So when you're looking at work sites, if you're looking at websites or any kind of technical type of online enrollment, make sure that you take a look at LifeSecure's product. Thank you.